Hi there, Serial Trader here. Let's have a look at crude oil as there have been some changes since the last video. So in the last video we were somewhere up here and I was working at the time what looked like it was unfolding as just a smaller degree fourth wave for this larger degree third that was still in progress at the time. But now that we've come down as deep as we have, that can no longer be considered a viable count. And instead I have us ending in this third wave up here with this 1, 2, 3, 4, 5, which fits. This fourth wave, this smaller fourth wave, is a little small in proportion to this second wave, although it's acceptable, and there's good structure and everything. So we still have from our low here, just below $64. We still have a nice 5 up, a 3 down, now another 5 up. Now it looks like another 3 down so far, although this could turn into something else. But so far, looks like a decent 3-wave zigzag decline. Now, on my positions I hold overnight, I was stopped out because I had my stop just below this extreme here, and that was on this chart it's 71.37, I believe. On my actual contract, it was 71.40, so yeah, just below 71.40, and I got stopped out. Obviously, we went, decently below that because that was 4-1 overlap. And other than the 4-1 overlap, this looks like an extremely, good-looking Elliott count. But we've seen this before in crude, where okay, we have this little bit of a 4-1 overlap, even though everything else looks really good. And then what do I do with that? Well, on a daily closing basis, okay. So on a daily closing basis, did we have 4-1 overlap? No. You can see this is where we had our extreme on a daily closing basis, and this is where our low just came in on a daily closing basis. So still a nice amount of space between there. So no closing price action for 4-1 overlap. And that worked well enough back here, I believe. We had something similar happen. Right here. So this was that fourth wave of this structure, and then we had the first wave over here, and ever so slightly we didn't quite have 4-1 overlap on a daily closing basis, even though we did it on an intraday. So I don't like to bend the rules of Elliott, and I'm not, because on this something like a futures contract where there's incredible leverage involved, closing prices are certainly more significant than intraday. And just because we've seen this work like this before in crude, it seems to just have a tendency to do this sometimes. So because of that, I'll give the benefit of the doubt that we still just have a 1, 2, 3, 4, now looking higher in a fifth wave here. I'll go back to the 4-hour chart, bar chart. So that being said, I did, even though I got stopped out, I think this coming week I'll be looking to reestablish some overnight longs, like a swing trade that I'll be holding, overnight for multiple days or more, potentially weeks if this cooperates. And looking for this, next impulse wave to the upside. But at this point, the stop, it might be a little tight with all the volatility we're having to put it just below the most recent low. And on this chart, 70.49, I think it's a little different on the other chart I'll be getting to. But if you really want to give it the benefit of the doubt, then you put it below the most recent swing low. So prior to this low, the most recent swing low, which was just under here at just under 66.80 and change here. Now that is a pretty wide stop, but there's another positive thing for the bullish count, and that's this. So if I draw a trend line, so this is the bottom of the move where we started this new impulse wave. Here's the wave 2 extreme, and that's the trend line just extended out. Now look at this. We've come up right to this trend line and finding some nice support here so far. So I'd say as long as we can hold this trend line and basically hold the most recent lows, we could be in business here for another impulse wave to the upside, and that should be a good move. I mean, we're currently at 71 and change. We're looking at I'd say we challenge 80 on the next run up, and let's just get a little idea of where that could get us. Let's do a reverse fib. Reverse Fibonacci of this move so far, if it did end So give us a bit of an idea what to look for. So 79.32 will be the 1.382. The 2.0 will be 83 and change. So yeah, around 80, if we can find some support here and get going again, we should be going up to knock on the door for $80. So it's still, yeah, looks like a not too bad setup here. One thing about stopping out the way I did, you can certainly get back in. And really, we're not far away from where I got stopped out. We're just, within cents from where I got stopped out. So it's always good to reevaluate the situation when your money's not on the line, and then get back in if it's still looking good. So I think that's kind of where we're at here. Now let's go to Thinkorswim candlestick chart. So on the daily bars, bit of a downtrend here for sure. We've lost the T line, the 3T line cross below the T line, lost our 20-day simple moving average. Didn't quite come down and hit the 50, at least not yet. Our oscillator, not quite in the oversold condition, although it's just starting to enter it. So overall, the uptrend still appears to be intact, but just definitely this shorter term pullback. I want to see it starting to reverse here to get some confidence. Want to regain that T line. Now one thing I'll mention, so the weekly candlestick chart, this is one knock against the bullish scenario, or the bullish outlook, and that's that we did a weekly bearish engulfing candlestick, and then we had this kind of long upper shadow kind of rejection week last week of those higher prices. But, we didn't close below the weekly T line either, so this is a bit of a mixed signal. A weaker, and we only engulfed one prior week. We didn't have multiple prior weeks engulfed, so it's a weaker engulfing signal. I think weighing it against the overall Elliott wave picture and also the trend line support that it's so far showing on the chart I showed previously, I think you can still give the upside a benefit of the doubt, but just, definitely have a stop loss in place and a loose stop if you really want to give it the benefit of the doubt. On this actual futures chart here, the November contract is the current front month, just below 66.86. So your stop could be at 66.85 if you really want to give this every chance possible to get going to the upside again. There's even a more recent, there's this support level. That's $69.98, just below $70. If you really want to just have a nibble at it without taking too much risk, you could put your stop below here, because it does look like we're finding some support, kind of bouncing off this 70-50 area or so. So yeah, just a stop just below 70. That's not a terrible idea for taking a nibble. And then you can increase the position size if we do reverse and start getting back above the T line. With a little more confidence, you could increase the size. Anyway, that should be good for now. We'll see what happens next week with crude. Still like the chart overall, but just a little bit of short-term uncertainty. Yeah, we'll check in later. Serial Trader signing off.